Chapter 7. In order to determine whether a food service operation is financially successful, the amount of money coming into the operation and the amount of money leaving the operation must be known. Food service workers need to have a working knowledge of the tools and processes used for documenting and calculating the sale of food and beverage to consumers. Likewise, food service workers need to understand the different types of expenses that are incurred by a food service operation and how these expenses relate to the financial success of the operation. A guest check lists the items ordered by a customer, the prices to be charged for these items, and the total amount of money due. The guest check may also include additional charges for items such as sales tax and service charges. It may also reflect discounts that reduce the total amount owed based on promotions offered by the food service operation. Servers commonly use handwritten guest checks to record customer orders in restaurants where customers place an order from a table or a counter. Handwritten guest checks may vary, but most contain the following information: the general information, the main body, subtotal, discounts, sales taxes, and the total of the bill. The first step in processing a guest check involves filling in the general information. Next, the menu items ordered are recorded in the main body. After recording the order, the server may give a copy of the guest check to workers in the kitchen. Sometimes the original guest check is passed off into the kitchen and then returned to the server once the food is prepared. Before presenting the final check to the customer for payment, the server records the cost of each menu item ordered. Next, all of the charges are added to calculate the subtotal of the food charges for food and beverages. A point of sale, or called a POS system, is a computerized system used to process customer orders, print guest checks, track daily operations, and generate financial reports. Basic POS systems include a computer, a cash drawer, and a receipt printer. Most food service POS systems have a touch screen or handheld tablet that can be used to process food and beverage orders. POS systems are also used to generate and print guest checks. POS systems help prevent errors due to poorly written or misspelled guest checks, lack of communication between servers and kitchen staff, and inaccurate calculations. Even though POS systems help eliminate errors by electronically performing math calculations, employees must still know how to spot a mistake. The information generated by a POS system is only as good as the information entered into the system. The amount of change given to the customer should be equal to the difference between the amount of cash presented for payment and the amount of the guest check. Change should be returned to the customer in an orderly process. The first step is to return any coins. The next step for the cashier would be to hand the customer the bills. The process always ends with the total amount of money originally presented by the customer for payment. This process helps to ensure that the proper amount of change is returned to the customer. Most food service operations calculate sales revenue on a daily basis. The calculations are documented using a standard form such as a daily sales record. The name of the form and the specific information recorded may vary based on the needs of the particular operation, but will contain at least the following basic information: total sales, gross sales, cash at the end of the day, cash at the start of the day, total cash revenue, total card revenue, total revenue, and over or short. There are many expenses involved in building and operating a food service operation. These expenses fall under three general categories: capital expenses, cost of goods sold, and operating expenses. A capital expense is a cost to an operation for buildings, building improvements, and equipment that is expected to have a useful life longer than 1 year. Most capital expenses are incurred before the food service operation is open for business. In food service, the cost of goods sold is the cost of the food and beverage products purchased that are ultimately sold to customers. An operating expense is an ordinary and necessary cost incurred by an operation as a result of carrying out day-to-day operations. Some of the major operating expenses of a food service operation include payroll expenses, Social Security and unemployment taxes, rent, interest, utilities, insurance, and license and supplies. Inventory value is determined by counting the number of food and beverage items in storage and multiplying the number of units of each item by their as-purchased unit cost. Inventory is the amount of food and beverage products that have been purchased and are currently being stored for future use. The inventory value at the beginning of a period plus the purchases made during that period represent the total amount of food and beverages available for sale during that period. Calculating inventory value. NU, the number of units, times AU, the as-purchased unit cost, equals the IV, the inventory value. By subtracting the inventory value at the end of the period, the actual value of the product sold, the cost of goods sold, can be calculated. When the cost of goods sold is greater than the amount of food and beverage purchases, it indicates that the amount of inventory was reduced during the period. Likewise, the cost of goods sold is less than the amount of food and beverage purchases. It indicates that the inventory was increased during the period. Calculating cost of goods sold. Beginning inventory plus inventory purchases minus ending inventory equals cost of goods sold. Payroll expense is the expense of an operation that includes any money paid to an employee who performs work for the operation. Employees are paid on either a salaried or hourly basis. A salaried employee is paid based on a fixed amount of money. An hourly employee is paid based on hourly wage multiplied by the number of hours worked. An exempt employee is an employee who is not paid an increased wage for working overtime more than 40 hours in 1 week. A non-exempt employee is an employee who is paid an increased wage for working overtime. Hourly non-exempt employees are required to be paid at least time and a half, 1.5 times the regular hourly wage for all hours over 40 hours in a week. To calculate the total payroll expenses for a food service operation, the gross pay of each employee is added together. Gross pay is the total amount of an employee's pay before any deductions are made. Examples of deductions include federal, state, and local income taxes, Social Security taxes, employee-paid health insurance premiums, and contributions to retirement or savings plan. Net pay is the actual amount of an employee's paycheck and is equal to the gross pay minus payroll deductions. The food service operation is required to withhold the amount of taxes owed by the employee and then pay those taxes directly to the government on behalf of the employee. A food service operation is also required to pay additional taxes required to payroll that are above and beyond the taxes included in the gross pay. These taxes include the employer's share of Social Security and unemployment taxes. A variable expense is an expense that increases or decreases based on the amount of sales. A fixed expense is an expense that does not vary based on the amount of sales. The cost of goods sold is a perfect example of a variable expense because there is a direct relationship between the amount of food and beverage an operation sells and the amount of food and beverage ingredients that it purchases. Rent and insurance payments are example of fixed expenses because the same amount is paid every month. For example, utilities such as electricity and natural gas are considered fixed expenses even though the costs vary from month to month. Generally, the payroll expenses of salaried employees is considered fixed expenses and the payroll expenses of hourly employees are considered variable.